Welcome to Beyond Beta with Kaia. This is a podcast where we discuss alternative markets and we speak with the managers shaping these markets. Today, however, we have a very special guest. Today, we are speaking with John Sharp from Hatcher Plus. John is a technologist, investor, founding partner, and the CEO of Hatcher Plus. And Hatcher has a very ambitious goal. Hatcher wants to transform and digitalize asset management industry. Welcome to Beyond Beta, John.
Thanks, Kaia. Great to be here.
Thank you for coming. We've known each other, John, for a few months now, and I've had the pleasure of seeing your platform close up, and I'm very, very impressed by what you're building. But your career spans over 3 decades, if I'm not mistaken, and it seems like you've done pretty much everything. You've done cybersecurity, you've done carbon credits, you've done telecom. Is there anything you haven't done? And how have these experiences shaped you in 2025?
Yeah, I like telling my staff, I think my first job out of school was janitor. I've pretty much worked my way up the ladder, I think, at this point.
So, and how has that past experience of different, let's say, industries, different jobs, different roles, how have they shaped you? Because right now, your day job is effectively in asset management, highly regulated, quite complex ecosystem, if you will.
Yeah. Look, I think the great thing about having a sort of rich and varied career where you've worked at all levels is it does tend to remove a certain level of arrogance that you might otherwise have, which I think is enormously helpful. Working in all these different jobs allows you, I think, to relate to a lot of different people. If you've owned assets, if you've managed assets, if you've worked in the fund administration field, if you've done all these different pieces, it helps you kind of like identify or empathize with the pain points of people that are feeling that. But I think more than anything, when you have all of these different life experiences in different businesses, it helps you understand the basis of commercial models that you can apply from one business. You can take a commercial model from one business and apply to another business. You can take practices from one business, apply them to another business. So there's huge value in being able to move between all these different types of jobs. And I've really benefited from that. I do think it expands your knowledge, but it just gives you a little bit more power to sort through situations, I think.
How do you describe yourself? I mean, I gave you 4 titles now, but I've heard yourself describing yourself as a coder as well. So what's your core? Who's John at the sort of identity level?
Well, the interesting thing is my first real job that was a fit for what I wanted to do was as a commercial arranger and conductor of orchestras. That's the first thing I did. Okay. And I did that quite successfully for about 12 years. Which is a fabulous management exercise, by the way. When you're standing in front of an orchestra and you're attempting to get these people with very big egos to all play at the same pace and the same volume with respect for each other, that's a fabulous management exercise. And so that's where I kind of started out as on the path. I think lost track of the question. Sorry.
That's okay. I asked, who are you at the identity?
Yeah. I think at the core, your identity is what you really love doing, I think, and if you manage to do that. So I really love doing, I really love doing music. But what happened there was it was actually the first industry to be disintermediated by software. You know, I'm charging $30,000 a day to get the Sydney Symphony Orchestra together at the Sydney Opera House, and there's some guy down the street who's got a brand new synthesizer, and he's charging $300. To go da-da-da-da on his synthesizer. And I remember going out to dinner one night with the concertmaster of the Sydney Symphony Orchestra, and he said, "We've got to fight these computers." And I thought to myself, I've seen Terminator. I know how that ends. I'd rather be on the side of the computers. So that's when I started studying digital waveform analysis, started getting into computerized, software-based versions of what I was doing. And then I made the flip over to really using software a lot and digital technology a lot. Bit like what I'm doing in asset management, actually. Just made that sort of flip between totally manual processes over to sort of automated software-based processes.
I have to ask this. So I also have background of classical music, having played different instruments. What's your favorite piece of music?
Elgar's Cello Concerto in E minor, specifically the version played by Jacqueline Dupre before she got sick.
Okay. I'm gonna ask for that later on because I did not record that. But
for anyone watching this podcast, it's the most incredible piece of
fantastic
music. Particularly her version of it is just, it's a bit like watching an athlete at the extreme limits of running a marathon or doing anything. I mean, her version of that is just, it's unbelievable.
Okay, I love classical music. But coming back to the world of asset management, and talking about asset management specifically, although you cover different other, let's call them industries, family offices as well, this has been one segment of finance that has not seen any digital transformation at all. Like in my view, it's still in 1995. You have a bunch of Excel files. Your data is in gazillion different sources.
Yeah.
It's impossible to consolidate and to make sense of the data. And now we're seeing this sudden rush to digitalization. So what's driving this trend? Is it the FOMO, fear of missing out because AI is taking over? Is it just a competitive advantage that asset managers are trying to achieve? Or what's behind this current trend?
Oh, I think it's very simple. The average family office or fund manager or asset manager is well, what they're doing today is far more complex than what they were doing in 1995. Like your family office in 1995, if it even called itself a family office, was probably 95% built around a core business that it was operating. And I always love asking family offices, by the way, what their core business is, because it's always fascinating. But that was a big part of the family office, so a much bigger part, I suspect, back then. And now family offices that I meet have these enormously complex sets of investments across multiple funds, multiple jurisdictions. And it is far beyond the capacity it's getting to the point where a large team running on Excel exceeds the limits of what Excel can do. So the large team is now suffering because they don't have the right tools. And the small teams, all of the tasks and all the complexities are beyond the scope of the small team because there's just too much to do. So we suddenly find ourselves in a world where it's become very, very difficult to manage the average family office. You've got other issues like fraud and error checking and all the things that you and I have talked about offline. And so the rush to systems, as you just characterized it, is really a recognition that things have gotten beyond the point where the teams can do it without sophisticated tools. Now, that creates a new problem, and that is if you introduce a tool that's too sophisticated with too long a training curve in it and whatnot, you're not getting any value there. And if that guy gets trained up on it and it's a 6-month learning curve and then he leaves, now you've got a new set of problems. You've got someone else that needs to be trained up on it. So we think the magical way of approaching this is to create a large amount of capability, but put it in a package that doesn't require an IT team and doesn't require 6 months to get up to speed, like something you can instantly get up to speed on and start using. Where we think that hiding the level of complexity, making it usable, but making this whole thing usable with a lot of power, we think is really the secret here. And that's what we see in all of the meetings that we have. When we demonstrate what we're doing, people go, oh, that's amazing. I think I just told you we're in Luxembourg recently. We got some really super positive feedback from all the people we met with there. So I think that's really the secret. You've got to go into this knowing that you're probably dealing with a small team with limited IT knowledge. They want to get up and going really quickly, and they need to do a lot of stuff that's really complex in an easy way. And if you understand those core principles and you design around it, then you can have success.
Yeah, I like really the approach you have. I mean, firstly, you've described the platform as a marketplace. That's, in my view, such an excellent description, and it captures really well how you've just spoken about those different features or modules, if you will. But you've also transitioned, I would say, from serving the venture capital market, and now you've expanded to family office and to asset managers. So what are the different challenges between these different client groups, and what are the main pain points for each?
Oh, I'd say the core challenge is in venture capital, you're revaluing things once a year. It's a very simple set of operations, really, at the end of the day. The reason we bit down on venture capital first is we were running a venture fund and we wanted to automate our operations. So that was the obvious thing to do first. And where things were lacking there were valuation statements for individual companies. By the way, I should mention that we have 420 venture investments in our portfolio. So it's not a small portfolio. And what we found is our valuation statements were taking like a day each, on a good day. And so doing an annual audit required a lot of people and a lot of time. And now those valuation statements, we can typically do them in a couple of minutes each. And in a few days, we're done. with 400 valuation statements. We used to really struggle getting information back from founders, and we built a really great information rights management tool that automates that whole process and assigns a score based on how responsive the founders are, which is called unimaginably the responsiveness score. And so what we're able to do with those, and there's many other things we build as well, but just to use those two examples, those things save us just months of work now. We're not on the phone constantly with founders. Our valuations, we're not on the phone constantly with our auditors. And so we started there at automating some really simple things for venture capital. And then where we went to from there is we had fixed income because we're earning interest on the capital we've not yet invested. So we started doing a fixed income piece. Then we sort of realized that if we took our private company analytics piece and our fixed income module, we've got the beginnings of a private credit management system. And so that started, and several $1 million later, we have a pretty awesome private credit management system. And then you go on from there. Then we started licensing the software to people, and we had a couple of guys come back and say, "Oh, this other software allows us to show my Ferrari F40 and my condo and my this and my that." So we added like personal asset management. And then it just went on from there. Like public equities is a very easy thing to manage because it's a very solved problem. So we added public equities, we added bonds. And before you knew it, we had the entirety of most of the asset classes, or pretty much all the asset classes you're going to find inside family offices. And then we just worked with the folks that were using our system just to build those up to a point of capability where everyone's pretty happy with what they do.
And what are the main pain points though of your clients, right? Like when you speak with a VC firm, you've clearly mentioned it's the information
rights management is a big one.
Exactly. Fantastically articulated. But let's talk about, let's say, family office or traditional asset manager slash fund manager. What are their pain points and how are you addressing those pain points?
Well, I think you know this very well because I think you're in the business of addressing those pain points as well. But just the biggest problem there is if you're a multifamily office or a manco with 35 or 40 clients, you have 35 or 40 different responses that are coming to you every month from fund admins or accounting firms. You have maybe 100 different positions that include very complex accounting from a whole bunch of fund managers that are part of that system there. You're paying fees to all these people in the form of management fees. You've got all these vendors that you need to manage, everything else. And so there's some research out there that shows that most people that go into that business expect to spend 20% of their time on back office functions and end up spending 80% of their time on back office functions. And I think that's really true. That's what I experienced going into venture capital. I went in there thinking I'm just going to spend all my time, sitting with founders and creating new technologies, and it's all going to be great. And I ended up spending the bulk of my time really running the back office because that's where things go south if you don't keep an eye on it. So I found, and in talking to people, I found that to be a very similar experience for everyone, is that people tend to underestimate the amount of time they're spending doing repetitive tasks and doing things that could be systemized in a really nice way. And once you do create those systems, by the way, once people do get on board a platform like FAAST, the world opens up because now they're actually doing what they signed up to do. They're doing progressive, value-enhancing things. They're making investments. They're working with their partners in a way that's really productive. They're not just shuffling paper around or trying to make things add up. And so that I think is another big driver at the moment is people want to get back to doing that core value enhancement work that they signed up to do. And they don't want to be fussed about, having to deal with all this back office BS. They want to basically get back into the driver's seat of their business.
Yeah, and that has been one of the sort of selling points or narratives around technology and AI, right? It's just taking care of those repetitive, boring tasks.
Yes.
And you can actually focus on your core function. But I want to ask about a platform. So you call it FAAST, which is Funds as Service. What does... If we think about this fund manager, how does the platform solve for their daily problems? Like what changes in a day-to-day operations of anyone in that company once they start using FAAST?
So if you go on any blog of any fund admin, what they'll tell you is that they solve problems for fund managers. That's why they exist. So everything from onboarding to accounts to setting up structures, et cetera. That's what the fund admin does for the manager. The problem on the manager side is that if they've outsourced all the data handling to the admin, they're entirely at the mercy of the admin to make sense of that data and pull it back. From the admin standpoint, if the manager doesn't have good systems, it makes it very difficult for them to handle that task and do the analysis and get everything together. So there's this we've reached a point in the road now where the managers don't have enough technology to service the admins, and the admins aren't getting enough data in a structured format from the managers to be able to do really good work. Or to do it in a timely manner, let's say. So there's this super interesting thing happening right now where the managers want a more independent view of their data. They want to be more in charge of the data, and I know you're seeing that as well with some of the people you work with. And the admins simply want to be able to get the data in a usable format immediately so they can act on it and move on to the next client. Because if you're an admin and you have 5,000 funds that you're dealing with, and 4,999 of those funds are giving you data that's unstructured or missing stuff or whatever, that requires you to just employ all these people that you wouldn't have to employ if the managers would just give you the data in a good format. And some managers do. I'm not saying this is a universal problem, but it is close to that. If you interview most managers, you'll find their core tool is still Excel.
And 100% agreed.
Yeah, and that means Excel times 30 funds times 100 clients over the fence to the fund admin, to some poor person that's sitting there going, oh my God, taking all this stuff, putting it into a form, and then sending back 30 responses or 100 responses. Now it's non-consolidated. Now the manager still has to sit there and figure out what they have to do in terms of all the fees and everything else they've got to do for all of those 100 people. And so what I'm painting here, I think, is an excellent picture of your typical asset manager. They're sitting there going, oh my God. Now, if you've got lots of people, you throw people at the problem and it's all manageable. But that you need a lot of people.
You need a lot of people for that. Yeah,
exactly. So that removes profit from your business. It's not a great look. And so,
plus you still introduce some operational error there, right? Like people make mistakes. Let's not deny that. So not to say technology doesn't make mistakes, but if you throw people at the problem, I think the error rate of people is about 5 to 7%. Back from my Bank of America days, I remember that statistics being...
The research shows it's much higher than that.
Much higher. Okay, that was the statistics we had at BAML back in the day. But, when you deal with millions of dollars, that's a pretty high risk that you're taking on.
Well, this is it. I was sitting with a family office a few months ago, and these guys have got about $6 billion that they're managing. And I said, well, how are you doing this? And he showed me their Excel model. And the guy's a billionaire. He's a very successful guy. He showed me his very, very sophisticated Excel model that he used to manage dozens of different structures that they own 23.79% of here and 41.2% of there and whatnot. All this is feeding up into this master reporting tool that's been built in Excel. And I said, what happens when someone in this vast empire, fat fingers something or adds a zero, whatever? And he just smiled. He said, chaos ensues.
That's exactly what it is. Yeah, that's exactly.
$6 billion, right?
Yeah.
And chaos ensues. Which is amusing, in the context of an anecdote. But come on, I mean, it's 2025. We need to. This is one of the core attributes that AI. This is why AI is such a gift to the world, because we can use AI to very, very quickly find and understand the mistakes that are there. It's a fabulous technology to put into service for that. But you can't just sort of add on some little snowflake or Tableau layer at the top and expect things to magically work. AI is something that needs to be very much embedded into what you do, and you need to be thinking about how you're going to use AI the whole time you're building your system. You can't just add it on as a little layer somewhere and say, oh yeah, we're AI, which is the mistake that almost everyone makes. Our system is built with AI, blockchain, modern technologies at the core. And my partner, Dan Hooktop, is just an amazingly successful, commercial AI practitioner. And so we started actually with a focus on AI, and we built from there. And I think that is the core way that you can protect against the kind of errors and things that creep into these massive Excel models that we know everyone's still using.
Yeah, I want to ask about AI, but one observation I'll make is that you talk a lot about mega funds, right? Like those that manage tens of different funds and spreadsheets. But having seen also a number of smaller asset managers with less funds and lower AUM, they still have the same problems, right? Even if the data comes to the same. They are even worse, exactly. Yeah. Even if data comes in the same format. Let's say you have a one fund administrator, you get exactly the same format every single time, but then you have to do your regulatory reporting, for instance, or you have an audit coming up, then you have to go into every single file, what you get the NAV file in an Excel format, retrieve that data. Somebody will have to manually punch these numbers together to, let's say, this was our total management fee. This was our total audit fee. This is how much we had qualified expenses for the tax exemption. So there is still so many manual steps that you have to take to come to a simple number.
And if you're the only accountant in that team, my God, no one knows what you do. No one knows why you're asking for a pay rise. No one understands the enormity and the scope of what you have to deal with. No one knows. You're sitting in a dark room going, oh my God, I have to manage all this stuff. And a lot of people are very stoic and they just get on with it and they work through it. But what you just described there is really an excellent way of describing what these guys face every morning. I mean, they turn up and they need to do this with an absence of systems that can help. So I actually think that what you've just nailed is the core people that we really go after. I mean, we've got several multi-billion-dollar funds that we work with, but I would say that what I found when I was sitting around talking with people in Luxembourg, we met with lots and lots of people there. The problem Luxembourg has is a human resource problem. They can't get enough people, so they're outsourcing to Cyprus, and India and other places to the level that they can, but that creates its own problems. So,
and Singapore is the same. Singapore has the same.
Exactly the same. So as we've talked about before, so the problem those guys face is they can't get enough people to throw at the problem. And so what do you do in that instance? You focus on your $1 billion plus clients and the guys that have 500 million or 200 million or God bless, $50 million. Those guys are really left without many options in those jurisdictions. And it becomes very, very difficult for them because they can only afford a small team, 2% on $100 million. It defines a sort of 7 or 8 person team absolutely max. So you've got a problem there with constraints around the size of your team, and yet this team has to do as much work probably as a multi-billion-dollar fund. To your point just now.
Yeah. No, this is spot on. Yeah. I mean, I think smaller managers sometimes even have more issues with the data integrity just because they have less resources. But the operations
on the problem as well. So
and the operational complexity is the same, right? From, let's say, regulatory perspective, doesn't matter if you manage 1 billion or 10 billion or even 500 million. You can't make any mistakes. You can't lose investor money. You still have the same level of integrity you have to put into operations.
And so guess what? So imagine you want to solve the problem. You're the principal of a family office and you need to solve this problem. And you know that the answer lies in automation and technology. Well, guess what? You also don't have? You don't have an IT team. Well, you've got someone who maintains your servers, but they don't write Python, or they don't have any expertise in pulling stuff together or integrating anything. So typically what happens is they'll start off down the road developing something that is like designed to be some sort of system. And it's generally started without any sort of real scope in mind. It's generally started like we did, 10, 15 years ago, started to solve a couple of problems, and then it grows. And suddenly you've spent $500,000, $2 million, something, and you've solved a tiny piece of your problem. And then that person leaves, and now you're left with this piece of software that's completely useless.
Yeah, exactly. And you can't even monetize that software, right? Because it solves your narrow problem. It doesn't solve the bigger picture, if you will.
The Simple.com did a survey recently, which is fascinating. They surveyed 300 family offices, and the top 2 requirements, by far, 75% of the recipients said, look, we just want one super integrated platform that does everything with the broadest possible range of features. One password, make sure it does everything, and that's it. And then data privacy and regionalization and white labeling, all those things were in there, all of which we do on our platform. But the core thing, going back to your observation that what we're building is a marketplace, I think the thing that we've gotten right is that we're enabling choice of all these systems. If your family office can be managed using QuickBooks, God bless, we're integrated with QuickBooks. You can start there and then if it grows in complexity to a point where you need to start using InvestTran or Paxos or FundCount or something else, guess what? We're integrated with those technologies as well. And so what we're doing is enabling choice of systems in a way that's all fully integrated. And what that means is you don't need an IT team. You can just sign up for this. And as your requirements grow, you can basically go into our marketplace and you can say, I need a different accounting system, or I need a different data analytics system, or I need a deal flow analytics, to plug into my front because I'm starting to invest in private companies, or I need a private credit management system. And all those things you can just turn on a switch in our marketplace, and you can add them into the system. And this is a bit of a first step. Most people are selling your system, a system that they've developed over years and years and years, which is the best system in the world. And that's great. That's an approach, the best system in the world. But if I don't like aspects of that system, or it's not right for me, I've got to go to an entirely different vendor, which is a huge painful experience, particularly if I already have data on that system. And so in our system, what we want to do is put forward different choices where the data models are consistent and can be moved between those choices. And that means you only need to use us. We're essentially just acting as an app store. Yeah, we're reselling these tools, but in an integrated fashion. And we just think this is the most powerful model on the market. I can't think of a better commercial model to put in front of an asset manager to solve their problems. Because if their problems are a small subset of someone else's, we can solve them with a small subset of solutions, and it won't be expensive. If they want to turn on all the bells and whistles, they can go and spend $250,000 a year if they want, by turning everything on, or they can spend $12,000 a year by just starting out, with what they need to manage just a small, non-complex family office. So the idea of having this range of options is fairly new in this industry, because no one's really attempted to do this kind of app store approach before. Or if they've done it, they've done it internally with their own set of tools, but without.
Correct. Yeah. No, what I like about the platform is, like you really rightfully point out, it aims to solve different problems, right? Like you can talk about the investor onboarding, doing the risk assessment, deal analysis, consolidating your entire portfolio. And I know that there is a pipeline also to address some of the compliance stuff, the regulatory stuff, operational stuff like reconciliation and all of these things. So I do think it solves quite a few problems, and you add an AI layer to it. And maybe you can just help me to understand, what is the use of AI? How much do you use AI? Is it just a deal analysis, or is it more broader? And what specific technologies in AI and ML are you using?
Yeah, so AI, of course, as we know, is a much misused term. If you want to go and raise some money, 2 years ago, you just slapped AI and everything, and off you went. I prefer, rather than artificial intelligence, I prefer the term applied intelligence, because I just fail to see what the distinction is between a machine knowing something and a human knowing something. It's applying intelligence is going to help us solve the problem. There's two ways that you can use AI, I think, most profitably. If you're doing something that everyone else is doing, like you're running a chat bot or something like that, then just use OpenAI. I mean, use Grok, use something that is tried and proven, and wheel it in for that purpose. If what you're doing involves your own proprietary data or your client's proprietary data, you need to think very carefully before you use any open system, because if you put your client's data up through OpenAI to the world, guess what? Your family office data is going to be out there on the internet and part of some large language model. And I'm not sure everyone realizes that this is a problem. So we use an offline approach to this, so that whenever we're dealing with sensitive data and we're dealing with AI models, we take that offline and we don't push it up to large language models that are out of our control. We keep it within our own model. So we operate in two very distinct universes. If you're asking a question about setting up a fund on FAAST, or setting up a SAL in Luxembourg or whatever, that's public knowledge. I mean, we're going to use OpenAI to serve up an answer on our system for that, and it works brilliantly. If you want to analyze a deal, and that deal is something only known to you and you don't want it out there in the wide world, we're going to use our proprietary AI models to protect that data, but also do the analytics, because our AI models, which we think are potentially the most advanced at least in the venture industry, when we're analyzing private companies, we can do that against a model that's been built on 650,000 private company investment, private companies with multiple investment stages, plus the 20 billion funds that we simulated using that data. So we have really proprietary understanding of portfolio modeling for private company investing. but also how to analyze these companies. And we just ran a 2-year study, actually, which is probably beyond the scope of this call, but it's worth mentioning. We analyzed 40,000 companies. We took their data from over 2 years, the score 2 years ago. And then in December last year, we reran the scores. And there was a very, very defined correlation between the high scores and valuation markups and the low scores and valuation markdowns.
Okay, that's
Super
interesting.
Clear. Yeah, and so we were able to effectively, scientifically, and prove across 40,000 companies, which is not a small data set, we're able to prove that AI can be used to find and fund private companies, which is great. So that's one area in which AI can play a huge role, particularly if you're a family office that has 4 or 8 people working there and you want to invest in private companies, is a great tool for that. Yeah, getting back to the small staffing problem. AI and the fund admin, which is, I know, where you're far more interested in this. What AI can do there is brilliantly take a PDF or an Excel spreadsheet or whatever, look at it, and look at the shadow nav that we've produced for the manager and compare these two things and say, well, it's $1.701 million out. And by the way, these are the 3 entries that we think add up to that. So you may just want to look at those before you go through, as part of your reconciliation process. So AI can speed up the process of reconciliation between the admin and the manager in a mind-blowing level. Okay. And that's such a great way of using that tool. So I guarantee you 5 years from now, there'll be no one in fund admin that thinks badly of AI, because it's just going to do a stunning job of helping them do what they do.
Absolutely. Yeah. No, this is for me the most exciting area, if you will, right? Like how to get rid of those, like you said, rightfully extremely manual things. And when things don't add up from reconciliation perspective, I've burnt the midnight candle, or whatever the expression is, too many times myself, trying to figure out where the error comes from, only to realize that maybe somebody has used 30 calendar days instead of 31, or perhaps they used the wrong FX rate, or any of
American date format,
American dates, many to choose from.
2 decimal places instead of 13 for crypto.
Yeah.
There's 1,000 ways this can go wrong, but what you just described is one person looking for the error. And that's not typically what happens. There's different people doing the reconciliation, doing the preparation of accounts, doing the core data entry. So when there's an error, what typically happens in the fund admin world is this goes back through a loop of people to find the problem, rework the numbers, represent it to the manager, and then there's another problem that goes back through that same loop. I met with a group here in Dubai recently. Their reconciliation process is taking 60 days. 60 days. It's one fund. Not complex, 60 days, because the management systems are not developed, and because the fund, that's causing the fund admin to go round in a loop, because there's only one person on this side preparing the numbers, and they're essentially tossing scraps of people over the wall to the fund admin, and the fund admin's desperately trying to sort of get this picture together. Yeah,
that's what I said earlier. Like, this is the most technologically underdeveloped area of financial services, in my view.
Yes, and unless you are an institutional level fund and you're using highly proprietary systems that developed by Citco or other people that are really sort of focused on that space, I agree. If you're below like $1 billion, you're in exactly this situation. You're in the situation, a suboptimal situation. If you're one of the large asset managers in the world, if you're BlackRock, you got plenty of systems and plenty of people you can throw at this. That's not a problem for them, because there's an endless supply of resources. But if you are below $1 billion and you just want to get everything right, you need to move to systems that are much more modern, that can help your staff do the right thing. And you'll just have so much, your life will be so much better for it. Because the stress levels of not knowing quite if everything's being handled well, we all know what that feels like, and it doesn't feel good. So if you can get rid of that stress, and you can make sure that everything, that AI has eyes on things, your staff have the right kind of tools to do stuff, you can do you can lower that level of stress and have a much better value enhancing life.
Yeah. I want to ask about observations from, let's say, using AI in deal analysis. And you have the benefit of seeing 650 different deals, you said? So many different private companies.
Yeah.
Sorry, 1,000.
Yeah.
And I remember seeing one of your presentations somewhere on the internet where you talk about the best moment to invest into a startup company effectively at the angel round. Like you see the much higher pickup in terms of valuations. Any other interesting observations that you have, and anything that the AI has picked up when it comes to deal analysis versus what the humans have not picked up?
Yeah, it's a really fascinating question, because everyone's got their own. Everyone that invests in private companies, whether it's equity or private debt, have their own kind of view of how to analyze those companies and what the important things are. And if you listen to what everyone says, you can basically say team is always number one. Where you got to invest in the best team. It's got to be a really good team. Should be 3 founders, not 1. There's all these kind of philosophies that sort of that people have, and then there's philosophies about where things sit in a particular industry. Do you invest in network orchestration, like our friend Mikhail that we were talking about earlier? Do you invest in biotech because that's your basis and that's your understanding? All of these approaches, when you separate out the common thread of this, is someone needs to sit there and analyze the company and say, okay, how does is this something I should invest in? As I mentioned, we've made 420 something investments now, or we've invested in 420 companies. Sorry, we've made many more of that.
Got it.
I would say it's very difficult to determine what the magic bullet is. Bill Gross did a fabulous video that anyone can search for on Google, in which they looked for why startup companies succeeded. And they looked at team, business plan, amount of funding, who the backers were, like all these different variables. And they came to the conclusion that only one thing mattered. And the one thing was market timing. If you come out with a technology, it's a bit like what Hatch is doing right now in fund management, fund admin, and in bridging that gap. I believe that we're right at the moment where that makes a whole ton of sense, which means we're going to be a very valuable company. But if 3 years ago, where we're doing with this, people are going, well, really, we need that? And 3 years from now, there'll be other people like Hatch trying to solve that problem. So right now, we're in that really sweet spot. If you go into, if you look at most companies and why they're successful, it's usually because they're in that sweet spot from a market timing perspective. They've gotten things absolutely right in that area. I think the other thing that works as well is when you're looking at these companies and why they should succeed. Obviously, the history and the background of the founders is another giant thing. But at the end of the day, what our black box is doing is trying to analyze, or not trying to, analyzing so many different variables that I think it's difficult for me to put all that on a map for you and talk about what's important, because what it's really doing is comparing success across tens of thousands of companies with likely success across tens of thousands of applicants, which is fascinating. When you look at that in entirety, you can say, okay, that is truly AI working on a vast level, far beyond what humans can probably compete with.
That sounds like a great solution, John, but tell me, can anyone use that on your system? Is that available for all your clients and users?
Yes, it is. We actually created a standalone version of this called HatcherScore, which is hatcherscore.com. And we're working with Microsoft, actually. They're now using the technology to judge the startups that they're seeing coming through their system. So look, this is a technology we've been working on for 9 years. So it's pretty baked at this point. It does work. 40,000 companies, divided into stuff that went up and stuff that went down. We feel pretty comfortable making the claim that it's a good assist. You still need people. You still need to be sitting in front of the founder and making judgment calls on whether you trust that person. And I think that's an important call to make. But at the same time, what this technology is able to do is really understand what else is out there in the world and make a judgment call on hundreds of companies you don't know about when it serves up that score. And I think that's just so incredibly useful.
I really hope that once you have, data you can publish, you're gonna write the white paper or some sort of observations, because these are fascinating data points, and I'm sure the marketplace would appreciate learning from your experience.
Well, there's actually a YouTube video out there I did last year in Sydney at a conference. It's called, using AI and venture investing or something like that.
Same one I saw. Same one, yeah.
Exactly. So you can Google that if you're interested. It's a very concise 10-minute presentation on what we found with this 40,000 company study. Look, the stuff works, and it's only going to get better from here. So I think it's very interesting years ahead, but certainly a great assist, because one of the trends we're seeing is family offices increasingly want to go direct and have their own portfolio of companies. And so this is a huge assist for people wanting to go directly versus just putting money into to VC or PE funds.
And you mentioned a little bit about the trends. So tell me, John, from your perspective, what does the future look like? Let's talk about asset management, but feel free to touch family office, fund management. Let's say in 5 years or 10 years, what does the technology look like? Is it something everybody uses in-house, proprietary, or you think it's more consolidated and used across the industry layer?
That's a fabulous question, because if you consider that we are a marketplace for technologies, we're one of the things I saw a guy called Josh Brown talking recently. He's a RIA out of the States. He had a fabulous video. Really liked the guy a lot. And he was talking about how he was fed up of seeing feature companies presenting to an individual technology to him that he needs to integrate with something else. It's just not going to work. And he's just tired of all these single feature companies. As a marketplace, what we think the future looks like is all of these companies sitting on one platform, all integrated, one password, sharing data, sharing user IDs and whatnot across this layer here, so that everything talks to each other. And in any language, we support. We support everything from English to Swahili. I mean, you can press a button and see the data visualized in different languages on the system. We support all different date formats, different currency formats, all that stuff. So the future is already here in terms of localization, regionalization, and that's finally arrived. Where it goes to from here, from a marketplace standpoint, is all these technologies are going to be available on a single platform. Maybe it's FAAST, maybe it's someone else. And they'll all be integrated and they'll all work together. And that's brilliant. And it'll just, we won't need to own equity in these things. We'll just put them out there on a reseller basis, just like Apple does with its App Store. And so if you take as the core premise that there's an unlimited number of technologies that will be available 5 years from now on the Hatcher platform, that's super interesting, because then the question you ask is, okay, what technologies are going to be interesting for family offices? Is estate planning is AI powered estate planning going to move into this, right? Is RegTech, is compliance now going to finally be integrated with all these other technologies to the point where if you take one action over here in deal flow management, it's instantly reflected in your compliance activity stream, or it triggers some sort of filing thing from a private company that's having an AGM or some other thing. So as all this stuff gets more and more integrated and the AI gets a better and better viewpoint of everything that's happening on each of these different applications, what we're going to see happen is just a completely different world where you will be able to use AI in the way that's intended as a giant assist to help manage across all these things. But it won't be limited to what we've been talking about in terms of admin and accounting and compliance and some of these other things. It's going to go into the realm of psychological assists. What do you do with the family member that just wants to be paid and doesn't want to be part of the business? How do you figure that out? What do you do with this core business that you want to sell off to a private equity firm? Who are the best people for that? Well, you'll be able to dial that up, and it'll say, here's the last 10 transactions that match yours. So there's a whole bunch of stuff that's coming down the pipe now that's going to fundamentally transform the way family offices and asset managers and asset owners work. It's just going to be absolutely amazing to see what happens 5 years from now. And all that's going to be based on an integrated approach that sits with an AI level and a blockchain level, of course, so that there's auditability of all of these decisions and everything else. This is going to happen. What's happening now, we're building it. There's other people out there building it. This will encompass so many more applications 5 years from now that we can't even conceive what they are. And a lot of those are going to be soft skills within the asset management area: succession planning, estate planning, jurisdictional differences, tax planning, handling all these things, all the stuff that's currently done by some of the big brains like Matt Parsons on our team and Tony Morgan on First Degree and some of the other people we know. All of these big brains are going to get sucked up into the AI world, and we'll be able to access all of that knowledge very, very easily. So 5 years from now, we're going to be working in an entirely different world. And that's not an idle boast. It's not going to take any longer than 5 years. Most of this stuff is coming in the next 1, 2, 3 years.
No, that's a very short timeline, actually, right? If you think about it, right? Yeah. So it's yeah. quite rapid.
Yeah, it's interesting. Like I've been involved. You mentioned I'm a coder, so I built the first version of this of the process management system we currently use. I have a team now. They sometimes still let me near it, which is very very generous of them. If you look at how you build LLMs and how you build the core tools of AI, it's not difficult. People think it's this this wizardry stuff. It is wizardry in terms of how you amalgamate or how you turn that into knowledge or accessible stuff. Like the transformers are amazing tools, but the core thing not to forget here is if you're involved in the engineering of how an LLM puts together, it's just compounded knowledge. And so the reason I predict that all this stuff is coming next 1 to 3 years is we already have the tool sets. GPT-5 is just around the corner. That's going to blow everyone's minds. So if we already have these incredibly powerful technologies, then what we need to look at is, are we doing the right things from a data privacy and a data access standpoint? Are we structuring the data and in the correct way between all these applications? And if you make the right choices in that area, it's not terribly difficult to imagine how you pull in these technologies. There's a company we just invested in called Yarinvest out of Switzerland. And what these guys do is fascinating. They study, they look at your last 10 years or 15 years of investment history as an investor. And they say, well, what's John good at? Well, he's obviously crap at public equities because every time he invests in a stock, it goes down. But he's brilliant at venture capital because he's 3.5x up on everything he's ever done. So if you look at those two statements, which Yarinvest does, they basically look at all of that investment history of an individual investor or a team, and then they can determine using AI what they should focus on, what their asset mix should be, what their portfolio, what the balance or what the weighting of their portfolio should look like based on their proven history of what they've managed to pull together. So if it analyzes Warren Buffett, it's going to come out and say, well, yeah, Warren's really good at this particular things, and that's what he should stick at. Now, Warren's pretty good at doing that analysis himself, it would appear, but not everyone is. A lot of people, I like to think that I'm smarter than I am in some areas, and I'm obviously empirically not. And so what this technology enables me to do is understand what I am good at and what I'm crap at. And that is itself an amazingly useful technology. Yeah, being able to apply that to investment history and then extrapolate a future from that is really helpful.
So basically, we can set up a contrarian indicator. If John invests in a public equity, then we should sell it immediately.
Yes.
Is that 100%. What you're saying?
Yeah, exactly.
And, interesting observation about Warren Buffett.
My wife is the counterfactual there. When my wife invests in something, it just goes straight up. So
there you go.
She does the public equity investing in our family.
Yeah, well, at least it supports, right? So the portfolio is well balanced. On the Buffett side, there is an interesting paper that talks about Buffett Alpha. And apparently, not to say key contributor to his success, but one of the very important aspects is the fact that he had access to cash all the time through his insurance business. So the float helped him quite a bit, which is very fascinating paper if anyone has time and inclination to read that. But we're coming to the sort of end of the podcast.
He essentially has that thing that family offices has, right? He has the engine.
Exactly.
And every successful family office has a successful engine.
Correct.
At the core.
Correct.
And if you don't have that successful engine, you can't use all this peripheral stuff to trade away from that. You got to do something about the engine.
The core business, yeah.
Priority.
Yeah. But coming to the sort of end of the podcast, John, there are always 3 questions I ask from each of the guests. Okay. I sent them to you last night. I'm sure you haven't read my email yet. So it's coming to you as a surprise, but it's perfect because you can shoot from the hip. So my first question, John, is what has been your biggest failure in your professional career, and how has that failure shaped you today?
Oh, that's a really great question. I'd say my biggest failure, and there'll be other people out there that recognize this. My biggest failure was in my early years. I failed to take responsibility for problems that were clearly my fault or as a result of my actions. And I would try and explain it away, and I'd try and whatever, not take the responsibility. And I think what I've learned in my older years is look, if something happens, take responsibility, take it by the horns and fix it, or apologize for it if it's not fixable, but get it off the table. I think is the key thing. If I have one failing in my early years, I wasn't good at taking responsibility for problems or mistakes. And I think I think I'm pretty decent at doing that now. I think we all suffer from that a little bit, but I do think that if you hit the problems head on and you don't try and avoid them and whatnot, you can be much more successful at solving.
So that's a good one. Who's been your worst boss or mentor, and what have you learned from them?
Worst or best?
Worst. But you can talk about the best one as well.
Well, I haven't had any bosses really to speak of. I mean, when I was in the satellite industry in the 90s, I had a great boss there. He wasn't a worst boss, but what he was brilliant at is we're all got the stars in our eyes, because we're launching satellites and it's all very glam. And he just always would literally bring us down to earth. And I remember him talking about satellites. His name was John Cusick, lovely guy. He was the founder of Primestar in the States, just terrific boss. I want to make that very clear. And he would always say, John, satellite's nothing but a giant radio tower in the sky. He'd just bring it always. And he was just brilliant at putting everything in a box and just saying, okay, this is the parameters. This is what we have to deal with. This is what success looks like. And so he was terrific. But I haven't had many bosses. I've always kind of worked for myself. I have watched bosses on occasion. One day I followed a lady around such and such in Singapore, who was running such and such at the time. Her name was Linda Locke. And I learned a lot during that one day watching her. It was fascinating because I noticed that every meeting that she asked me at the end of the day, she said, what did you learn? And I said, what I learned was you went into every meeting and you helped a decision come out of that meeting. You just helped push all the decisions forward. I said, not everyone liked all the decisions that you made, but they definitely appreciated the fact that you made the decisions so they could move on. And so my core learning from that day was make the decisions. They may be unpopular, they may be slightly uninformed, but you can't do anything unless you make decisions. And so it's super important that you just allow the team to move forward by making popular or unpopular decisions.
Yeah, and this is my observation also, having worked with quite a number of different companies, whether as an employer, as a consultant, is that often there is decision paralysis. People are afraid to make a decision, or option B, all decisions have to be made by the one guy. That's another failure point, I would say.
And sometimes it's unavoidable. Like I think it's super important to always divide things into strategy and tactics. Allow people to make any tactical decision that is required. When it comes to strategy, of course, you need to push that upstairs. You don't want to take all the troops and suddenly have them on the wrong hill. So I think strategy, push it upstairs. Tactics absolutely should be allowed to. That decision should be allowed to be made at the level that it's needed to be made at.
Yeah, John. My last question to you: what is the one belief? Let's call it about investing or markets or technology in your case, that you've completely changed your mind on?
I'd say I've completely changed my mind that AI is. I think when AI first started sort of making waves, everyone thought, oh, it's going to take over all of the grunt jobs and it's going to not affect anything in the cerebral level, in the sort of white collar job level and whatnot. I've completely changed my mind on that. And I think I'm echoing what a lot of people watching this probably also think. And that is that AI is going to basically provide an assist everywhere. And it's going to probably present humanity with its biggest management challenge ever. We're really going to be wrestling with this. And my core concern is you've got members of Congress or governments all around the world that are fairly clueless when it comes to the actual implications of, first of all, what AI can do, and then what the ramifications of this are going to be across all these different industries. Now, we're super lucky. I live in Singapore. I'm actually here in Dubai today. These are two highly intelligent countries. These have people on staff, in government, figuring this stuff out at a very, very high level. Other parts of the world, America comes to mind, are highly reliant on input from the private companies that are developing all these tools. Not entirely sure that's the best approach. I think you need a good combination of smart people in government. Here in Dubai, they have a ministry of AI. They actually have a core group of people focusing on those issues. That you need smart people in government in places like Singapore and Dubai, but other governments need to take those models and figure out what's going to happen. I have confidence that Europe will get this right because Europe just has this better mindset when it comes to looking after its populations. I worry a little bit about some of the other countries that they may not have the wisdom or the knowledge at government to deal with it. So I've changed my mind on what AI can and will do. in the future. I still think it's a very benign, very powerful, good force. But that's going to for that to work, for that to turn out to be a positive thing, we need to really transform the way we're looking at this at every level of policymaking and government. Otherwise, we'll screw it up. And so I've changed my mind on what AI can and can't do. AI can do a lot more, I think, than we ever considered it could. And that's going to have some pretty interesting ramifications, not just for asset owners and asset managers, but the entire planet.
Yeah, and the change is exponential, so it's not going to stop.
It's exponential times exponential. It's a different level of exponential. I'm really looking forward to the release of GPT-5, which is imminent. I think that's going to just be another wow moment for everybody.
Brilliant. John, thank you so much for your time. I appreciate having this conversation with you and hearing more about Thatcher.
Likewise, guys. I really, really enjoyed it.
Thank you.